Hello, this is Brian Rezny, president of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Firmly into the second half of this year, markets are again off to a decent start. There has just been so much information out there about the next market crash, a recession, but that was actually at the beginning of the year. A market crash has not happened. A recession has not happened, although as I've talked before, we're having little pockets of recessionary input from different sectors at a time. And the economy is clearly slowing somewhat, and China is clearly in a deflationary environment. Their economy is not taking off at all. After they reopened fully, it's actually decelerating. So do I see a real bad recession this year or next year? We do not. Do I see some slowdown as we get into the further part of this year, in the fourth quarter, maybe towards the end of the year? I certainly do. But I still feel we're going to have a positive year on the GDP, and I fully believe that the market will continue somewhat higher through the end of the year. Of course, we could have a 10% correction tomorrow, or we can go up 3 or 4% more by year end. That's the short term. If I look at the next 3 to 5 years, I'm optimistic. I firmly believe the Fed's going to be reducing interest rates sometime towards the end of this year, and certainly as we get into next year as our economy slows and inflation continues to abate. China's deflationary problems are really the big problem for China and other parts of the world. So if they slow too much and become too deflationary, that at that point I feel our Fed and also China will probably start reducing rates substantially again as we go into next year with China's issues. So volatility is normal. I talk about that all the time. Nothing goes straight up. But this year so far has been a pretty good year. We continue to own oil, and we continue to like oil for the reasons of supply and demand factors, and again, the current administration's war on oil. We see higher energy prices in the future, and ultimately supply and demand does have a huge impact on the price of crude and natural gas. Looking at other sectors of the world or the U.S. economy, everybody's talking about AI, artificial intelligence, and they're talking about semiconductors driving that. There are areas of the U.S. economy or the equity market, stock market, that in our opinion are really getting pretty frothy and overvalued. So these are areas that we trim over time and maybe look to reload if we get a realistic pullback in some of those areas. Nothing goes straight up. Nothing goes straight down, but we want to own fundamentally strong areas of not only our economy, but potentially other parts of the world that are jumping on that bandwagon and buying those needed supplies like semiconductors. You know, we've recently talked to a number of clients who are really kind of concerned, with all the transition going on about cryptocurrency or digital currency or the dollar not being the dominant currency of choice around the world. Folks, there's a lot of propaganda, and I repeat this a lot. There is a lot of propaganda that you get in your inbox that is talked about on the internet, that is even talked about on some of these news shows. Things that kind of get you hyped up and thinking that, oh my gosh, the dollar's not going to be the dollar, China's going to be the currency of choice. I firmly believe we've got 10 to 20 years or longer of the U.S. currency being the currency of choice. Now, may there be some changes, may there be other currencies that start to come in over time in the next decade or two? Certainly. But at no point currently do I see in the next decade that the U.S. currency is not going to be the dominant currency. But again, the emails that I've gotten from a few clients or comments that I received from a few clients, and I ask them, where do you get this information that the dollar is no longer going to be the dollar? And again, it's sources that are not reliable, that are often hyped up, that are trying to sell you something. So just remember that. We spend a lot of money on research every year. We spend a lot of time researching not only our economy, but the world economies. And one of the things that is most important is not putting your emotions or personal bias into investment decisions, because that's always been proven to be poor choices for really increasing risk and reducing return. If you have any questions about your portfolio or any concerns, or we need to schedule a phone review or office review, please give the office a call. And as always, we appreciate your business, your trust, and also if you have any friends or family that you'd like to refer to our firm, we always appreciate your referrals. Make sure you have yourself a safe and profitable day.